Welcome to my YouTube channel. I'm here to cut through the noise, get straight to the core insights, and basically give you that shortcut to being properly informed. I love digging into those surprising detail and making even a complex stuff actually quite engaging. So picture this in your mind. You run a business here in the UAE. You have just used, say, a brilliant marketing consultant based overseas. Maybe you have subscribed to some specialist software delivered online. And then the question hits to your mind, what's the VAT situation on that? Well, that's exactly what we are going into today. We are using the UAE Federal Tax Authority public clarifications VAT P044 as our guide. It really sometimes confusing area of the VAT. What happened when your businesses right here receive the service from the supplier outside the country, right? So our mission today, let's unpack the main requirement, the obligation, and crucially some important exceptions related to what they call concern service. Well, I'll explain that term in a second. Understanding this stuff can genuinely make your compliances simpler, and it's really quite interesting how the UAE VAT system handles those cross-border deals. It's all about the fairness, consistency, making sure the tax apply evenly, even if the service provider is somewhere else entirely. This clarification VAT P044 it really lays down a kind of roadmap for the businesses. It doesn't matter if you are just starting with VAT or looking to refine the things. It helps to ensure that service used here get taxes. Okay, let's drill down then. The absolute core of this clarification revolve around this term concern service. Sound a bit formal, but I gather it's a quite precise. According to the actual VAT law, Federal Degree Law number 8 2017, concern service basically have a three key characteristics. Now your questions will be what are they? One, they have to be imported, which just mean received from a supplier outside the UAE. Two, their place of supply is considered to be in the UAE based on the rules. And number three, this is very crucial. They won't be exempt from VAT if they were supplied by the local UAE based businesses. So, if I say you import IT support from a company in India, the place of supply rules say it's supplied here and IT support isn't exempt. Boom, it's a concern service. And just to be super clear, when we say import for the service, we are not talking ships and containers, right? No physical goods crossing border here for the service. Import simply means the business in the UAE receive that service from outside the country. It's the trigger really, and the rules apply to the taxable person. Basically, any businesses registered for the VAT are one that should be registered. If you are that taxable person receiving the service, well, you need to know what comes next. The clarification says that a taxable person inputting a concerned service is treated as if they are making a taxable supply to themselves. That sounds, well, a bit odd, like you are invoicing yourself. You may ask, what's the logic there? It does sound odd initially, I agree, but it's the mechanism we call the reverse charge. Think of it like this. Normally, the suppliers charges VAT, but if the supplier is outside the UAE, they generally can't register and charge the UAE VAT. So the reverse charge, it puts the responsibility onto the recipient, you the taxable person in the UAE, to account for that VAT. For saying you supply it to yourself, the law make you liable for reporting that VAT. So now you understand that the reverse charge mechanism is a method to make sure the VAT is collected on the services consumed here, even if the supplier is abroad. Now you can say that makes sense. Now you understand and maybe have another questions, and that is very practical. What does accounting for the due tax mean? What box do I tick? What form do I fill? It means you calculate the VAT on the value of the services you received and you report that amount as a output tax. Specifically, it goes into the box 3 of your standard VAT return, and you do that for the tax period when the service is considered supplied according to the tax rules, usually when the service is performed or invoiced. It's a likely key compliances step. Now, back to that supplying to myself idea. You might have one another questions that if I am a technically supplying it to myself, does that mean I actually have to like a generate an invoice from my company to my company? That sounds like a nightmare administratively. That's a very common question, the general rule the general rule, strictly speaking, say register. Someone with a UAE tax registration number or TRN should issue a valid tax invoice to themselves for each concerned service they receive. And typically that self invoice should be issued within a 14 days of the date of supply. You might say that it's an administrative burden, so you could ask, is there any relief from this to creating the extra invoice? So this is very important point in the clarification and maybe a bit of welcome surprise for someone. The FTA, the Federal Tax Authority, they acknowledge this burden. So they state that you, the recipient, are not required to actually issue that tax invoice to yourself for the concerned service. If and it's important, if you meet certain conditions, the huge relief potentially. What are those conditions? The absolute main condition is that you must get and keep the invoice issued by your overseas supplier. That's the key document. This supplier invoice need to be clearly shows the service details, the amount, and the consideration as a technical terms, and who supplied it and to whom. Critically, you still have to do the reverse charge calculations and report the VAT in box 3. And of course, the keep good records that the details of the transactions if the FTA ever asks. But you likely don't need to create the extra self invoice. That is much more practical. Now your questions may be, what if the overseas supplier, what if they don't issue what looks like a standard invoice? The clarification mentioned reinsurance service is an example where the document might look different. That's a good point. The FTA allow the flexibility here in situations where a standard invoice isn't the norm. They say a document or maybe even a few documents together can be treated as a supplier invoice, but these documents combined must contain certain minimum information: the supplier's name and address, your name and address, the date and the document was issued, when the service ended, a description of the service, and the payment details, amount, and currency terms. So, as long as you have something from the supplier with those key details, you are probably okay using the exception. Now, you may again have a one doubt in your mind that what if the supplier give you the absolute nothing that meet even those basic requirement? It could happen maybe with less formal arrangement. In those specific, hopefully the rare cases where you don't get any acceptable invoice or equivalent document from your overseas supplier, then that administrative exemptions for not self invoicing does not apply. In that situations, you might technically need to issue the self invoice or potentially apply for a specific administrative exemptions from the FTA, but that involve meeting other strict conditions laid out in the regulations. Now, the really a big questions for any business is, can I get this VAT back? Can I claim it as an input tax? Yes, absolutely. And this is a fundamental to how VAT works. Avoiding tax, sticking up within the business chain, you can generally recover this VAT as an input tax. So, assuming you are using the service for your taxable activity, what do you need to do, or have you actually recovered that input tax? The key things again is the documentations. You need to hold the relevant supporting documents, and what's interesting and consistent with the earlier point is that you can recover the input tax even if you didn't issue a self invoice, provided you have that valid invoice from the overseas supplier or the equivalent document. Now, maybe one question arises in your mind: when can you actually make the claim? Is it immediate or is there a specific timing? I would say there is a specific timing rule. The rule says that you can recover the input tax in the first tax period in which two conditions are met or in the tax period immediate after that. The two conditions are: number one, you have received and hold the required supporting documents, typically that overseas supplier invoice. Condition number two, you have paid the consideration for the service payment. Now, one questions may be raised in your mind: how strictly is the payment defined here? Does the money actually have to have left my account? That's a good practical question. The rule offers some flexibility. You are considered to have made a payment if you have actually paid, or if you have the intention to pay the amount due within the 6 months of the agreed payment date. Well, today we have a really deep dive into the details of the VAT on these concerned services. We have seen how the reverse charge method works, this idea of you supplying to yourself. We have covered the need to account for output tax in the box 3 of your return. Points, especially the flexibility around the invoicing and the clear documentation need, can genuinely make your VAT compliance smoother and help avoid any nasty surprise down the line. It really just highlights how vital good record keeping is, and maybe even having the conversation with your overseas supplier about the kind of documentation they provide. Being well informed is a key. Definitely avoid those unexpected tax headache which lead to a final thought for you to perhaps ponder. We focused on the concerned services today, but what other kind of international dealing does your business have? Are there other cross-border transactions that might have a VAT implications you haven't fully considered? Are you confident your accountant accounting for everything correctly? Let us know. Comment below if you have any questions or doubt regarding the concerned service.